Hey friends, it's
Matty Loans.
your mortgage nerd reminding you that I'm back. Actually, back for the first time in my very first edition of What's the Story Construction Loans Edition. See, I've created this sequence to give you some insight on maybe the hot topics, industry news, and some helpful tidbits that may help yourself or maybe a friend or family member that is experiencing
Difficulty in the industry.
as I stated, I'm back to full throttle. I got one of my first calls of last week was a couple from out of state. They were looking to build a new home and wanted to inquire about how to finance it. How timely the call, the inventory is low, the demand's still high, and some folks figure in this environment, might as well build it. Well, I couldn't agree more. So here are the top 10 construction loan commandments that'll help you keep your story straight when getting a construction loan. So here we go. Number one, this is stating the obvious, but you're going to need to partner with a lender that offers construction financing. See, truth be told, not all banks, not all lenders, not all mortgage companies offer these type of instruments. So it's a good idea to check around. Maybe a credit union, community bank, a cool regional bank or two, and then maybe an independent and really compare the terms. Now, also, this is 2023, folks. The credit markets have shifted. If this was an idea that you wanted to get started on in 2023, you may want to repoll your sources as the markets have changed. You might be surprised to find out what has transpired in the last 6 to 9 months. Oh, and by the way, your big, large banks, they don't do these. They just don't have an appetite for them. And most people go, well, why is that? It's really due to the complexity. They're high-speed, low-drag institutions and don't have an appetite for these type of loans. Number two, the most popular types of construction loan programs are the single close and the two-time close. Now, they both have pros and cons, but as the name insinuates, a single close is simply that. It's one loan that converts at the end, from temporary to permanent. There's one loan signing, one set of closing costs, one qualifying process, whereas on a two-time close, it's double the fun, right? Two signings because you're going to need to get the loan, the temporary financing, and then refinance that with a whole separate closing. So that means double the cost. And oftentimes a floating rate because the temporary financing may be based off of prime, and you may not be able to lock in those terms until the very end. Number three, construction loans typically mean custom finance. You don't need a construction loan to buy a new production or a semi-custom or custom build. That's typically end financing. So just because it's new construction doesn't mean you need a construction loan to do so. But you're going to need this on build-to-suits, right? And when we say construction equals custom, well, that means the contract's custom as well. There's no uniform construction loan or construction contract. Every builder is going to have their own, although you might need to see a common denominator as the AIA agreement. But expect even speaking to two or three different builders, two or three different types of contracts. Now, despite what the contract looks like, the bank is going to want some uniformity or maybe some ancillary pieces to that, a cost breakdown, a budget, the plans and specs, the description materials to help do the appraisal on the property. So please keep that in mind. Also, just to really wrap it up, maybe a questionnaire to the builder in terms of the time frame that they need, if they've taken any down payment, and then always to confirm, is this a fixed price contract or variable? Because we see more variable, aka the cost plus agreement in this market. Terms you need to familiarize yourself with. Number four, just as the saying goes with a lender, title and escrow are just as important. Not all title companies do these loans. Not all title companies that do these loans do them particularly well. So it's very important you partner with somebody that understands this process, not only from the new angle, but also with your lender. They're critical mass to keeping the project on schedule. They're responsible for the title breakdowns, the draws, scheduling the inspections, and of course, funding the project. If you don't have a good title person, I don't know how you're going to be able to keep your story straight. Number five, documentation's key. You got to keep receipts on just about everything. All of your soft costs need to be documented. And it's important that you not only save the invoice for it, but how you paid it. Credit card, bank, cancel check, copies of the bank statement. You're going to need these for the bank. And I always recommend you set up a dedicated bank account to this. Now, just understand, there's going to be a lot that'll transpire after acquiring the lot if you haven't done that already. And you might have to meet with the HOA, and there might be a couple other things that you're going to need to add in terms of the nuance with your setup. So keep all that documentation handy. Number 6, you can use construction loans to acquire the parcel as well and technically wrap it. Now, it's harder to do because of all the documentation, all the working parts that you have to have ready, because you can't close on the lot with a construction loan until you have those, because we're under the assumption that you're going to break ground in the next couple of months. So you really have to have it teed up, but it's a cool little advantage that if you found a parcel that maybe a builder's selling, you can buy the parcel and start the construction process, all at once. Number 7, loans funded in several stages, which means that if you borrowed $100,000 for a $200,000 total project, you're going to take your $100,000 and put that on deposit with the title and escrow company. Again, why they're so important. And then that other $100,000 will be doled out over time. Let's just say if it's a 10-month build, and let's just say for easy round figures, you're going to do $10,000 a piece, one per month per draw. So you're not going to start with a balance of $100,000. Your money is going to be used first. After we extinguish your $100K, we'll get into the construction loan and we'll build on that balance. Okay. Number 8, you can't have enough time. Typically takes my clients about a year to figure out what they're doing. They're complicated loans. They got a lot of working parts. You need so much input from so many other people. It actually took one of my clients over 7 years between the acquisition of the parcel and getting the project start. Now, in between, it was a teardown, so that was part of it. But these loans really need to take time to develop, and some lenders don't even want to speak with you until they know that you have a permit. So it's very crucial to understand that you're going to need time just on your behalf. Then you have to also think about it on behalf of the builder. We're still experiencing some supply shortages. There's labor shortages, and you need to give your builder enough time to do it, because there are only so many crews that do the labor on framing or the excavation, and if they're behind, you're going to be behind. Number 9, this may speak more to one-time closes, but understand that the payment is going to flip. Now, obviously, on a 2-time, you're going to refinance it, but on a single close, you're going to go from interest only to then P&I payments. But that's only after you're fully committed on your loan, the home's ready for occupancy, and you're ready to live in it and start paying back the loan. Until then, interest-only payments, because aggregately, each month will go by, and the balance will accrue, and your payment will be reflexive of that. Last and not least, number 10, it's equal parts rewarding and frustrating. Cost overruns, extended build times, limited supplies, change orders. Julie Andrews and all of her favorite things, where they're going to be yours too. But you need to understand it's a process. It's never perfect. It's custom, and it's yours and only yours. And really, is there anything better than the smell of a new home? I don't know, but that's all I have for now. That's my story, and I'm sticking to it. We'll see you again next time. Have a great one.